let me be clear about cash flow. It's the only thing I care about, okay? Because there is no business without cash flow. You might be able to last for a couple of years borrowing money, getting more investors, but if you don't have cash flow, you're going to zero. It's that simple. And I think you have to face that reality as an entrepreneur. Cash flow is the blood of business. If you don't have any blood, you're dead.
What Kevin O'Leary, who's an investor and entrepreneur, is talking about in that video is business cash flow. But in this video, what we're going to focus on is what I'm going to call personal cash flow. But to truly understand personal cash flow, it's good to understand both concepts and just this idea of cash flow. So business cash flow, here's a little definition, is the concept of inflows and outflows of a business and the net income or deficit they have after each business cycle. Another way you can look at it is after everything is accounted for each month, is the business profiting or losing money? But that is business cash flow, and in this video we want to focus on personal cash flow. And personal cash flow is pretty much the exact same concept except on a personal basis. So I kind of want you to just think about your personal finances the same way a business would think about their finances. And so when it comes to personal cash flow, the main idea is, is your cash flowing in or is it flowing out each month? And this is probably the most important concept in personal finance, in my opinion, because when you look at this financial pyramid and you build upwards and you take this personal cash flow, this is going to be at the very base of this pyramid with basic budgeting and basic tax knowledge. And when climbing that financial pyramid, you first need to master your personal cash flow. If you are going to go climb up this ladder and kind of make sure with your own life, you're going to do well in these other concepts. But at the base, you really got to do well with personal cash flow. So what is personal cash flow? And the definition I'm going to give is that personal cash flow is the money that you have left each month. And this is the key: after taxes are taken out and all expenses are accounted for. So again, it's after taxes are taken out and expenses counted for. And it's back to that concept: is the cash flowing in or is it flowing out? Or another way you can think about it, are you profiting or are you losing money each month? And also make this note here, because this is important, because PCF, which also means personal cash flow, involves expenses or stuff that you are spending money on, you need to wait till the end of the month to make personal cash flow calculations. So it won't do you any good to do these at the beginning of the month. You got to wait till the end of the month to see how your personal cash flow is doing. So let's take a look at an example of this, and let's look at the example of Dave Smith, who we'll say is an accountant. So the three things that you need to take into account when it comes to making a personal cash flow calculation is your salary per month, the taxes you'll pay per month, and then your overall expenses for the month. And that's why you need to do these at the end of the month. And once you have all three of those, you can calculate what your personal cash flow for the month was. So let's say Dave Smith's his salary for the year is he makes $72,000 as an accountant per year. And let's say his tax rate is 28% total tax rate. So by total tax rate, I'm saying that that's all the taxes that he paid. If you just add all of them up, 28% is taken out for that. And then let's do his expenses for the month. Let's say he has $1,500 a month rent, $325 for car, $125 for car insurance, $80 for gas, $220 for utility bills plus phone bill, $550 spent on food and groceries, and then $475 on other expenses. So with all this information, you can make Dave's personal cash flow calculation here. So let's start with salary, and we want to get this to a per month basis. So if he makes $72,000 per year, we're going to go 72,000 divided by 12, because that will get it on a monthly basis, because there's 12 months in the year, and that's going to give Dave $6,000 per month before the taxes are taken out. But now we have to take out the taxes, and so if the tax rate is 28%, that's like they're taking away 28% of your paycheck. So if they took away 0, you'd go 100 minus 0, but since it's 28, we're going to go 100 minus the 28% taken out, which means you get to keep 72% of that paycheck. And so we're going to use this 72 multiplier, and all you have to do is add a decimal to that, so it makes it 0.72 multiplier. All right, so now let's get into the expenses for the month, and if you add all those up, that's going to give you a total of $3,275 in total expenses that Dave had for the month. And now we have everything we need to make his personal cash flow calculation. So we're going to start with that $6,000 salary per month, And then we're going to multiply that by the taxes taken out. So again, that's like 6,000 times 0.72 is like you're keeping 72% of 6,000, which is going to give us $4,320 in income after taxes. So now all we have to do, the last thing, is subtract those expenses. So minus $3,275 in expenses. And when we subtract that from our after-tax income, it's going to give us a positive $1,045 that we have left. So we have $1,045 positive dollars in personal cash flow for the month. And so going forward, what this class is about and what mastering personal finance is about knowing the best ways to put that monthly personal cash flow to work for you. So if you look at that pyramid here and you have that $1,045 and you start to climb this pyramid with interest, investing, compound interest, understanding more advanced taxes, you can best put that $1,045 to work for you in the future and put yourself in a good financial situation. So by increasing your financial knowledge, you're going to be able to do two important things when it comes to personal cash flow. The first is that you can learn ways to increase your personal cash flow per month. And the second is you're going to learn how to best use your personal cash flow to benefit yourself in the future. So now we got to talk about one thing, and this is negative personal cash flow, the horrible, terrible negative personal cash flow. And negative personal cash flow is when your expenses are more than your after-tax income and you lose money for the month. And again, one thing to note though is that this will happen from time to time. Nobody is ever going to always have positive personal cash flow months, because you're going to have months where you might go travel somewhere, you buy more advanced luxury items, you go to a concert, games, or you're just eating out a lot more per month. You know, you're going to have months when you do lose money and you have negative personal cash flow. But the thing is, you want to avoid consistent negative monthly cash flows, because when you have consistent negative monthly cash flows, what happens is you have mounting debt. And that is something in the financial world you really want to avoid. So let's look at Dave's personal cash flow if he overspent for the month. And again, let's say his salary and tax rate didn't change, but he just actually, like, he has a more expensive car and he has a lot more that he spent on food and just a lot more that he spent on other expenses for the month. And so you add all those up, instead of 3,000 something in total expenses, he has 4,715. And so when you subtract that, that's actually going to leave him for the month in a negative personal cash flow situation where he lost $395 per month for his personal cash flow. And again, that is okay, but you want to avoid doing this consistently. Again, it's okay if you do this from time to time, but consistently, that's not a good situation to be in. So we're going to close with this, in that the idea is to have consistent positive cash flow months, and you want to try to avoid having more than a few negative cash flow months. And just by getting good at creating positive personal cash flows consistently, you are going to be on the right path to setting yourself up for financial success. And that is going to be our financial tip of the day. So with all that, all I'm going to leave you with is take it easy.